Hey Forex and Futures traders, Raghi here, and we're going to start off with a look at the dollar and Dow as we take a peek at the risk in this market for December the 5th. Now right away you can see that going into the close we had a little bit of that rollover here on the Dow, but what I'm focused in on is the sandwich we're making between the 50 DMA and the 200 on the daily time frame. Now when you think about the daily, there was probably no more psychologically significant a indicator than a 200 period simple laid on a daily time frame. Second to that would probably be the 50. So when I've got both these levels in play acting as dynamic support and resistance, they're swooping in, they're squeezing price action, and for now price action seems to be obeying that. I'm going to notice that the market's gone into just kind of wait and see mode as this fiscal cliff. Who is tired of that pair of words? I know I am, but we're going to have to live with it going into the end of this month and, quite frankly, probably going into next. So for now, this is a way to gauge where it is that the market sentiment is at as we creep up towards the 50-period DMA and the 78.6. We creep up towards the 13,080 area. On the YM contract, we're probably nearing maybe an overextended, possibly even an overbought type scenario, and then we head down towards the 200 period simple, say the 850 area, around the 200 period simple. We're probably reaching oversold. We'll probably continue to squeeze until there's a reason not to. What's the reason? Some kind of optimism, whether it be optimism coupled with the European story or whether it be the fiscal cliff story. We're going to need some optimism to escape this. And my expectation for exhaustion comes not just from the moving averages, but the market trend that we're in right now. All the blue graph candles that I've got here indicate more of a neutral market. The sideways 34 EMA wave that I have here also indicates that sideways, range-bound, consolidating market. So that's why I expect this market to be squeezed in this area. On the flip side of this is actually the US dollar, which has been moving lower. I would not call this a downtrend on the daily, but it sure is a lot of bearish sentiment and momentum, which has taken a breather today. As you can see, we're reaching a level at which we've found support before in this area, and we're teasing this 161.8 extension. We're looking at that 79.50 major cycle level. In fact, today's low is 79.56. We're sitting at 79.80. Another minor psychological level, and if we can move up higher from 80, we could probably make a run at the 80.00 level, from 79.80 to 80.00. But I suspect there's going to be plenty of pressure on the dollar index. My outlook from here to the end of the year is more bearishness until we see some sort of resolution to the fiscal cliff. Mind you, I really do think the dollar is really in the midst of what could be more bearishness even past the fiscal cliff, because I think when you look at the equities market, it really does want to run. It's almost got the reins being pulled back on it because of the fiscal cliff. So if the dollar's suffering because of the fiscal cliff concerns, then once these are resolved and the equities markets run, we could see the inverse correlation between the Dow and dollar kick back in again, and that too would be a bearish story for the dollar. So I'm really looking at more bearishness for the dollar even past the first of the year. I don't think we can, even a Forex trader like myself, can't help but look at the sell-off in Apple today. In fact, it reminds me of when I was filling in over at the Trade the Markets chat room. One of the questions I was asked was, where is the bottom in Apple? Heck if I know. Nobody does, but what I can tell you, and I went into this big dissertation about Apple TV and the iPhone and so forth, but we don't have time for it here. But I think it's definitely worth mentioning. This pair of lines that I've drawn are purely based on price action, the breadcrumbs the market's left behind. In fact, I loved this candle right here, this long wick, and then the snap up to close, and then we re-entered this choppy area where traders aren't really willing to get this market back above the pressure of the 200 DMA, but they're not really willing to push to lower lows much further past the 520, 527 area. We'll see what this does, though. Does this really start to break some sort of threshold in terms of what traders are willing to hold in terms of Apple? I think some traders are going to be looking for some opportunities to to scoop up some Apple, though, at 520. So if we get down there, I would expect, and I'm not guessing, I'm looking at past price action to be my guide, unless there's some fundamental shift, I expect buying support to kick in there. By the way, for you Forex traders out there, why does it matter? Well, looking at stocks like IBM and Apple are a big picture look at the risk environment. Those are two of the number one weighted stocks in the Dow and the S&P. Apple for the S&P, obviously, and IBM for the Dow. So if I'm trying to understand the risk environment, whether equities are rallying, whether that might carry the euro with it, pressure the U.S. dollar, make the yen sell off, there are definitely connections back to the Forex market, which let's take a look at right now. Two pairs in focus for me today are the Euro-US and the Aussie. Euro-US, I like the trend here on the 240. I like the trend on the 1 hour. I just missed my limits at 30.55 today. I've still got them out there. It's an exhaustion level for the 1 hour time frame. It's actually a swing buy level for the 4 hour time frame. So I'm going to be looking at support either in this area here as exhaustion. You could overlay a stochastic and take advantage of that, or as a swing buy. And these were alerts that went out to the Trade Forex Futures members yesterday. So I know many of you stepped out and got long at that level. If you missed it, I think there's a second chance. Tonight we've got a 7:30 p.m. pair of economic reports for the Aussie. We've got the employment change and the unemployment rate. I'm already short, as you can see, the Aussie US. I think that there is, even though I'm looking at dollar weakness, I think we could see a near-term Aussie weakness story. I'm not looking to take this Aussie down to the basement. I'm simply looking to take this Aussie from about the 480 area to about maybe 420 to 400. So this is really just taking advantage of the chop that you can see here on the 4 hour pretty clearly. I'm positioned short. Down to 420 would be great. Down to 405 would be better. But that's what I'm looking for. So just trying to take advantage of some near-term Aussie weakness. And yes, it sounds kind of unusual, but if you take a look at the trend of the day on the 5 minute, the Aussie has had a difficult time getting any footing against the dollar, and it's not like the dollar's been overwhelmingly strong. If we see a weak U.S. dollar, certainly that's not going to help my cause here, but I do think the Aussie could outpace even a weak U.S. Again, just in the near term. Just looking for some price action momentum to take me from 480 to 450, which is where we're at right now, from 450 to about 420, where I will take a piece of my position off the table. At 405, I'm going to go ahead and pull the plug on the trade. That is my outlook for today, December 5th. Thanks for joining me.